Hello, everyone, and welcome to The Buck Stops Here. I am Catherine Murray. Well, we certainly have seen a nice year-end rally in the North American equity markets, the U.S. markets certainly more so than the Canadian market. But a lot of questions remain in terms of what 2024 looks like. I want to bring you a great guest today, someone who I've known and spoken with and interviewed for many, many years. That is Dennis Gartman. He is the retired publisher and editor of the very well-known, famous The Gartman Letter. Dennis, great to be with you. Thank you so much for joining us.
Thank you for the introduction, and the check is in the mail for that great introduction and history. Thanks much.
It's true. It's true. The director and producer just told me that this is my 100th episode of The Buck Stops Here. I'm so glad I'm sharing it with you. I can't believe it.
And that's quite an accomplishment. Well done, young lady.
Thank you. Thank you. Okay, Dennis, there's a lot to go over for sure. Let's just first start with what we've been seeing in the market. It's quite incredible that there has been this Santa Claus rally. It seems as though the Fed is managing to placate investors. And it seems as though the market really does believe that they're on hold and are going to cut in 2024. How do you see this?
I think the Fed is on hold for a long period of time. I think that high for longer is my mantra at this point, not higher for longer. I think they're done with raising the overnight Fed funds rate. But I think it's going to be quite some period of time before they reduce the overnight Fed funds rate. People are using the term pivot. Has the Fed pivoted yet? If pivot means that they've stopped raising rates, then indeed the Fed has pivoted. My definition is that pivot means that they will actually begin the process of cutting the overnight Fed funds rate. That I think is going to be very late in 2024, maybe not even until early 2025. But the market seems to think that there are 6 cuts coming. The dot plots seem to think that there's 3 to 4 cuts coming. I think consistency with the Fed over the past 10 or 15 years, actually over the past many decades, the Fed seems to be very slow in responding. So I think it's going to be a long period of time before the Fed, in my terminology, pivots and begins the process of cutting overnight Fed funds rate. But they will eventually cut. They'll take it down 25 to 50 basis points at a time, but it's going to be late in 2024, maybe early 2025 before it happens.
Do you think that there's a risk in waiting? Because obviously the market really thinks and believes that they will be cutting sooner than what you're predicting, and therefore the market's moving higher on the expectation of lower interest rates, boosting equity values and asset values. Is there a risk that they're too late? And what does that lead to?
I think there's a risk that in the market that the market has anticipated the Fed to become terribly aggressive, and I think that that's an ill-advised decision on the market's part, on investors' parts. I think the stock markets, whether you're talking about the U.S. market, the Canadian market, the European markets, the Japanese markets, they've all responded as if the Fed is going to go on an aggressive process of easing monetary policy very quickly in 2024, and I think that's an ill-advised expectation on the market's part. I have missed. I'll be blunt though. I have missed the rally that began in late October and continues as we speak today. The market has surprised me with its ability to just keep going higher and higher and higher. But it bothers me that the CNN Fear and Greed Index has got into a level of that it got to in late 2021 and very early 2022. Which indicated a huge amount of excess buying had gone into the markets at the time, and you got a precipitate, very substantive decline that followed through in the next several months. And I fear the same thing is about to happen here. But we're going to rally through the end of the year, through the 2023, and it looks to me like a replay of 2021, 2022, when the market reached its top in the very early days of the second term there.
Do you think that the U.S. economy and what we've been hearing from companies, corporations on their most recent quarterly calls warrants what we're seeing in the market as it relates
No,
to
I
stock
do not. I
performance
think
moving
that
higher?
No, I do not. I think that markets have how do I want to say, divorced themselves from, I think, economic reality. The economy is doing fine, but it's not doing great, and it's certainly not doing exorbitantly, such as the stock market would seem to indicate. I think that the economy is doing okay. It's doing fine. It's doing pleasantly, but it's not doing exuberantly. And the stock market has been exuberant, of course, the past month and a half, and I think it's gotten well ahead
Hmm.
of itself.
Okay. We're going to take a quick break. When we come back, much more with Dennis Gartman.